Hey folks, welcome to episode 12 of FinMet Mondays. A big thank you for tuning in every week as we complete 3 months of the podcast today. Sunil, as always, pleasure to have you back on the podcast.
It's a pleasure to be back, Shawn.
I think a good starting point for today would be to make sense of the volatile gold markets on Friday evening. Could you briefly give us an account of what exactly transpired in the gold markets? Why did we see such wild swings on Friday evening again?
Yeah, so just to recap, what happened was that just before the inflation data, CPI data was announced in New York on Friday evening, our time, gold was trading around 1835 levels. And as soon as the high inflation data was announced, gold actually fell, which surprised a lot of people. And there was selling coming in. It went all the way to, I think, 1826. And then when the equity markets opened, there was a sell-off, an aggressive sell-off in the equity markets. And I think at that time, money flowed out of equities into gold. And you saw gold suddenly go up from 1826 all the way to about 1872. So we closed around that level at the end of the day, and the equities closed at the low level at the end of the day. So I think that's what we've seen. This is a safe haven trade that took place on Friday.
Interesting. And the Fed will definitely go more aggressive on interest rates. That's definitely for sure. But what do you think the extent of the aggressiveness will be? Would they probably price in, think about a 0.75% rate hike probably, or you think they'll stick to a 0.5% rate hike going forward?
Yeah, so there is a Fed fund rate increase expected on Wednesday. So they will announce the normal expected 0.5% increase at that time. But certainly the inflation data that we're seeing accelerating inflation month on month over the last 6 months. So the inflation in May was the highest that we've seen in the last 6 months. So I think that is really going to scare the Fed. And so what you'll see is when they announce the 0.5% increase, they will say that they're open to looking at 0.75 if needed, if inflation doesn't slow off.
Understood. And do you think gold has enough mileage to probably cross above 1900, or there is a possibility of a slowdown going into the coming week?
Yeah, I think in the short term, it depends on the equity sell-off. If it continues on Monday, on Tuesday, more money will go into gold before things settle, and then we may see a pullback. But in the short run, 1900 is definitely possible. In the medium run, of course, it's, I think, more of a calmer story because gold generally suffers when interest rates are very high. So we'll have to see how the scenario unfolds in the coming weeks.
Understood. Thanks, Neil. I think this is going to be another fantastic week for markets in terms of, I think, volatility for sure. And see you next Monday.